Donald Trump's victory in the 2024 elections promises significant changes, not just for the United States, but for the entire world. The strengthening of the dollar, new trade tariffs, and the pursuit of an aggressive energy policy will have profound impacts on the global economy. But how will these decisions affect trade, financial markets, commodities, and international relations? In this video, we'll explore the effects of these policies and what to expect from Trump's second term. Get ready to understand global economic dynamics in a scenario full of uncertainty and opportunities. 1. Dollar domination and its effects on global trade. With Trump's victory, one of the most immediate and visible effects will be the appreciation of the US dollar. This happens mainly due to the expectation of a more expansive fiscal policy, including tax cuts and increased public spending. This appreciation has important implications for global trade. First, the strengthening of the dollar benefits U.S. companies operating within the United States. They benefit from a stronger currency, which facilitates financing and domestic operations. However, for emerging countries, this strengthening brings challenges. Many of these economies have dollar-denominated debt, meaning that any appreciation of the U.S. dollar increases the pressure on servicing that debt, making it more expensive and harder to manage. Analysts predict that the dollar could appreciate around 3% relative to other major global currencies, such as the euro and the yen. This movement reflects a growing trend among investors to seek safe assets, such as the U.S., especially in times of economic uncertainty. This increased demand for dollars contributes to a growing flow of investments into U.S. financial markets, such as stocks and government bonds. As more global capital is directed to the United States, this further strengthens the U.S. economy, creating a positive cycle that reinforces the country's dominant position in global trade. Thus, the strengthening of the dollar is not only a consequence of U.S. domestic policy but also a force with significant global impacts, benefiting U.S. companies but generating challenges for economies around the world. 2. The impact of Trump's trade tariffs. Let's analyze the impact of the trade tariffs implemented during Trump's administration, one of the key aspects of his economic policy. During his campaign, Trump promised to impose higher tariffs, particularly on Chinese goods. He even proposed tariffs as high as 60%. A move aimed at pressuring China into making trade concessions. However, these measures affect not only China but also other global economies. First, China, which is one of the United States' main trading partners, faces the risk of an even more pronounced economic slowdown. With higher tariffs, access to the world's largest market becomes more difficult for Chinese companies, which could hurt the country's economic growth. Additionally, Europe, and particularly Germany, which heavily depends on exports to the U.S., is also vulnerable. Higher tariffs could impact its industries, making their exports less competitive in the American market. In Latin America, countries like Mexico and Brazil also suffer from the higher tariffs. Mexico, which has a close trade relationship with the U.S., could face an even greater depreciation of the Mexican peso, possibly surpassing the 21 pesos per dollar mark. Brazil, like other countries in the region, could see its economy pressured by debt crises and high global interest rates, worsened by the rise in U.S. interest rates. These effects show how Trump's trade policies have global repercussions, affecting not only bilateral relations but also economic stability in various regions worldwide. 3. Energy and commodities impacts on global production and trade. In the global energy scenario, Donald Trump's presidency has significant implications for the production and trade of commodities, particularly in the energy sector. The strategy of maximizing U.S. oil and gas production puts the country in an even stronger position, maintaining its leadership as the world's largest oil producer. With the expansion of fracking and the reversal of restrictive environmental regulations, the U.S. becomes a net exporter of energy, helping to keep domestic prices lower and providing a direct benefit to the American economy. However, the global impact of this policy can be twofold. While domestic production in the U.S. may help stabilize oil prices locally, it also creates strong competition for giants like Saudi Arabia and Russia, both major energy exporters. This increase in supply could result in a potential drop in global oil prices, which has implications for economies that depend on energy exports. On the other hand, the imposition of more severe sanctions on countries like Iran could further reduce global oil supply, pushing prices up and negatively affecting countries that rely on fuel imports. Furthermore, the trade war with China, which resulted in challenges for commodity markets like soybeans, also directly impacts us farmers. The 2020 trade agreement, aimed at increasing Chinese imports of U.S. agricultural products, was not fully realized. As a result, demand for us soybeans fell, negatively impacting farmers in the short term and creating uncertainties for the future of commodity trade. Therefore, while Trump's energy policy brings benefits to domestic production and U.S. consumers, it also generates challenges and uncertainties for global markets and commodity producers around the world. 4. The stock market and the most impacted sectors. In the financial markets, Donald Trump's victory tends to benefit certain companies, particularly those that benefit from expansive fiscal policies and deregulation. The energy, defense, banking, and manufacturing sectors are among the most favored by tax cuts and fewer regulatory restrictions. These factors help drive the stock prices of these companies, creating growth opportunities, especially in times of economic recovery. However, it should not be forgotten that the instability generated by these policies could bring challenges. Multinational companies which depend on stable global trade may face higher costs and lower profit margins due to higher tariffs and a slowdown in international trade. This is particularly relevant for companies operating in sensitive markets, such as technology. Speaking of technology, major companies in the sector, such as Apple, Microsoft, and Amazon, could benefit from Trump's stance against excessive regulations. However, tariffs on electronic components and semiconductors pose a risk to the profitability of these companies. If production costs rise due to these tariffs, the impact could be significant, affecting the stocks and financial results of some of the world's largest companies. The instability generated by tariffs and trade tensions could increase market volatility, creating an atmosphere of uncertainty for investors. This implies that while some companies may benefit from specific policies, the risk of new trade wars is also present, which could affect the economy globally. In summary, stock markets will face both gains and complex challenges for investors during Trump's second term. 5. Outlook for emerging markets and the global economy. Now, let's examine the outlook for emerging markets and the global economy under a possible Trump presidency. Emerging markets, particularly in Asia and Latin America, may face greater volatility. Policies like high tariffs, rising US interest rates, and a potential escalation of the global trade war could reduce investment flows and harm productivity in many of these countries. For these markets, trade tensions could translate into considerable economic challenges. However, there are also opportunities. Economies with a more robust domestic growth base, like India and South Africa, could benefit from China's economic slowdown. With US attention focused on its own trade interests, these economies could become viable alternatives for investment and growth. Another important point to consider is the impact of Trump's climate policies. His approach, which tends to favor less regulation regarding the environment, could hinder global renewable energy initiatives. This would include the reversal of regulations encouraging the use of clean energy and the suspension of investments in sustainable technologies. However, if Congress intervenes and resists some of these proposals, the damage could be limited, especially in sectors like solar and wind energy. Furthermore, the appreciation of the dollar, driven by Trump's economic policies, could increase the cost of external debt in emerging markets. This would particularly affect Latin American countries, which already face high currency vulnerability. Finally, it's important to highlight that Europe, which depends on the U.S. economy for its growth, may feel the effects of a shift in US economic policy, which could impact trade relations and investment flows between the two regions. These are the main challenges and opportunities that emerging markets and the global economy may face with the continuation of President Trump's policies. And that's the end of today's video. Thank you for watching, and I hope you enjoyed it. Please click the like button, subscribe to the channel, and hit the bell icon to enable notifications so you never miss a new video. Your support means a lot, and I look forward to sharing more content with you soon. See you next time.